There is so much liquidity and so much undisciplined money bidding up everything in public markets and private markets too. How does a prudent investor compete?
As I look at the markets today, I think some of the most important characteristics are that there's been a frenzy of acquisition activity, driven in part by these low interest rates. So you have private equity in a dominant presence in the market, venture capital, dominant presence in the market, SPACs, which are facilitating public offerings, et cetera. So you're in a transaction-rich environment, one in which many of the participants, unlike, say, 30 years earlier, are in business with the sole goal of buying and selling companies. And when they're doing this in a hasty way and they're using aggressive lenders who are dying to give them money, there are always two kinds of opportunities in the market that exist. One is at the point where those acquisitions take place. People need capital, and that's not always an efficient process. It's not always a neat process, but it is a process where sometimes there's a lot better risk return than simply buying commodity, high-yield product, if you will. The other thing that happens when you get in an aggressive market is people make mistakes, but it takes time for those mistakes to be apparent in the market. So you have to be patient, and you have to wait for those mistakes to happen, and that's what creates all of the stress and distress and other things.
Is this a recovery you play like any other recovery, or is this one different?
We saw huge outflows right after COVID. We saw the market seize up, and everything was cheap. Now we're in a market where generally people are comfortable. They feel like the economy's coming back. Unemployment is low. So everyone's trying to put money out, but in a world of very, very low rates. But what's a little different this time, in my view, and it'll take a while for it to play out, is just the magnitude of the government's programs, both Treasury and Fed, in stimulating an economy that already is on the uptick. So it's pro-cyclical.
Does it appeal to you or does it frighten you?
It frightens me. I think the economy has plenty of momentum to improve even without all of the stimulus that's going on. And I think we're really entering the land of the unknown with the extent of stimulus that's going on, both fiscal and monetary. We've started to see some awfully bright people pulling the alarm hard. My own concern is not that we necessarily are going to have rates spike to the moon. I think the economy will do some self-correcting. And as long as there's a lot of money chasing opportunities, that will cause competition for lower rates. And maybe that means we do have lower real rates for a time, negative real rates for a time, because of the inflationary issues, which is almost part and parcel of this. But I think the longer term thing that I worry about is the hangover from all this stimulus. When you add this much debt to the federal debt balance, and when you project out 10 years or 15 years or 20 years, and you figure out what percentage of the federal budget spending is likely to go towards servicing interest, it doesn't leave a lot of room for other activity. And I worry that we're limiting our flexibility in a way that puts a bit of a damper on the economy in the medium and the long run.